We're just closing up a really volatile week here in the equity markets. Most of that action can be attributed to the FOMC statement and Ben Bernanke's comments Wednesday afternoon. That's really when things started to go haywire.
So right after Ben Bernanke's commentary, we saw a big sell-off in a lot of the more defensive sectors that had led us much higher throughout most of this year. Utilities led way lower this week, and for the remainder of the year, we're positioning ourselves in tech, fins, and we also like industrials.
Well, and the Stocks Under 10 portfolio, which is run by David Peltier, we're looking at a sector that got really hit this week, and that's the home builders. We like Standard Pacific Corporation. We're watching it here because of its exposure to California, its unique land positioning, and its exposure to the luxury and move-up buyer, which tends to lead to higher prices and higher margins. But we're going to wait for the stock to move back down to $8 before we sort of get involved.
Okay, and actually next week we get a couple housing data points, including Case-Shiller, so that could be a catalyst for the shares.
Absolutely.
And we just wanted to point out another part of Bernanke's testimony this week that we thought some investors may have been overlooking was they actually upgraded their GDP outlook for the rest of the year. So
yeah, so it's going to be important to watch all the economic data points that come out next week to see if they can kind of help the market rebound here,
Definitely.
Well, that's what we're looking forward to next week. This is Andrew Krill, and I'm Lindsey Bell with TheStreet.